Welcome to the Stage Analysis Members Weekend video. It's Sunday the 16th of October 2022. Got a few bits to run through tonight. I'm going to start off with a bit more of a broad look at what's been going on in the market at the moment as the market attempts to make a stage 4 continuation breakdown currently. So have a look at what's going on in the market breadth, etc., and industry groups. But I wanted to do a bit of a focus at the end of the video today on the upcoming earnings for this week, as there's quite a lot of earnings this week. I think there's more than a few hundred stocks or so reporting. I did a post earlier highlighting around 48 to 50 of those stocks that are coming up this week, and also wanted to do a follow-up on the gold and silver group focus a couple of weeks ago to see how they're developing or how they've fared within the pullback at the moment we've seen following they had a strong thrust up, but some obviously gold and silver itself have pulled back quite hard, so we'll see how the actual individual stocks have fared as well, and whether they've managed to continue developing base structures or whether they've actually broken back down again and made continuation breakdowns or not. So okay, starting today with the dollar index. So I don't cover the dollar index often, but it has been in a huge stage 2 advance for more than a year now. So, and this has been a heavy headwind against what's been going on in the actual major market indexes. So the dollar index tends to run counter to what the stocks are doing. So if the US dollar is in a stage 2 advance like we've seen, then we tend to see the market in stage 3 or stage 4 generally. So as you can see, we broke out into stage 2 down here, so back in, I think it was late September time at this point in here. So we mark that area, late September time, broke out into stage 2 more convincingly, had a stage 1 base developing through here, and has been in a strong stage 2 advance ever since. But more recently, I've been highlighting a few weeks ago, so at the end of September, I highlighted the potential buying climax on this week here. So this is a buying climax candle as such. As why I say that, not from a Wyckoff perspective per se, but from an actual just a technical perspective on the weekly candle, is when you make a 12-month new high and then close negatively, that's considered a potential buying climax. It's something that Investors Intelligence does, and I'm not sure if other services do as well, but they actually mark the various buying climaxes and selling climaxes each week. So this was one of them a few weeks ago, and potentially it could well be a Wyckoff buying climax as well. So if we go into a daily chart here, you can see that we've had a potential change of behavior of the sharp move back down here. So we see the pullback within here a little bit deeper than we've seen previously. This one was a little bit more shallow, but was still quite deep in here. So it's not overly a change of behavior over the previous pullbacks per se, so potentially a buying climax, as I said, but it's not quite had a major change of behavior as yet. So if we mark the potential range, you've got your buying climax, your automatic rally, then this would mark this bar on Thursday here as a potential selling secondary test, so pulling back in. So Friday's reversal move back up again, didn't manage to get back above that as yet. So if this bar in the next few days stays below this level, doesn't manage to go back down, then that would then mark this as the potential secondary test. We'd expect this to continue developing in a range or potentially roll over completely. But if it does manage to push back up towards the highs again, then we were looking to see if it forms an up thrust or not, and then potentially comes back into the range again. So, or whether we make a continuation breakout. But for the moment, it's looking like this could potentially be a change of behavior, a move towards early stage 3, but it hasn't yet. It needs much more confirmation. So we've only got what we call phase A of a potential trading range developing at the moment, but it needs much more confirmation in order to be considered a move into stage 3. If it was, then this would mark our potential initial stage 3 range, and then we'd be looking for how it developed through here. It could take a long time in order to develop if so, but at the moment, just first potential signs of a change. And if the dollar is changing, is potentially moving into stage 3 type behavior, then that would obviously be good for stocks. So with stocks at the moment, the S&P 500 here, for example, attempting to make a stage 4 continuation breakdown. If we look at the weekly chart, you can see that. Then obviously if the dollar index actually stops and reverses at this point, then that would be beneficial for stocks and might potentially give them a chance to move back into the base structure that's been forming, which could then potentially turn this into a potential stage 1 base. So at the moment, it's fighting between being stage 1 or stage 4. At the moment, stage 4 is winning still. So continuing in a stage 4 pattern at the moment, although it's been going basically sideways for the last 4 months or so. So we've got a attempted spring attempt on Thursday. It hasn't yet overcome, but Friday's action was fairly strong and fairly negative off of that 21-day moving average, which you can see in here. It came back into around the midway point of the previous day's bar, but it hasn't undercut that bar yet. So at the moment, we've got this range from the last few days that's holding. So if this can continue to build and form a higher low, then we could start to see a push back into the range. And with earnings coming up this week, obviously expectations at the moment are exceptionally low. We've got market breadth indicators at near extremes. So there's a lot of expectation of poor results, so we could actually get a surprise to the upside. Who knows? Not a prediction, but there's certainly a lot of fear priced in at the moment to a certain degree. So the contrarian thing would be for it to rebound a little bit. It doesn't mean it's going to reverse back in and go to stage 1, stage 2 massive rally, but we could get a short counter trend rally with the earnings results basically coming in with such extremely negative views. But we'll see. Obviously, all we care about is the price action and how those results come out. So if they do start to gap down, surprise to the downside further and continue in the trend, then the trend remains. But obviously on alert for any potential reversal signals. But at the moment, the trend remains down. We remain in a stage 4 continuation attempt at the moment. So looking for it to reverse that in order to show some bullish signs. So if it starts to get back above this 3,700 level-ish and 21-day moving average there, which at the moment is at 3717.01 there, then potentially you could start to see some more bullish signs again, as that would starting to break above the short-term moving averages again. But as I said, still stage 4 currently. If we look at the weekly charts here, so NYSE chart remains in stage 4, made a stage 4 continuation breakdown, what we got there 4 weeks ago, and has failed to rally back up into this range. So it remains in stage 4 at the moment. Nasdaq Composite, you can see, been in stage 4 for longer, broke down earlier in the year and has continued to make new lows in stage 4. So we've got lower lows continuously on the way down through here. So the trend remains lower. You can see by the channel lines here that have drawn. So there's a clear downtrend at the moment. Obviously could break below this. We could draw a broader trend line down here, which would take it below here. But we have got of note, obviously it's the Nasdaq Composite here has bottomed around the 10,000 level currently. So obviously large numbers can tend to be areas where we get swings developed. So 10,000 is a potential swing area to consider, a level of interest, as it's also at the bottom of this channel line. Nasdaq 100, similar kind of picture here, potentially could get a push down to that 10,000 level in that as well there. Similar, obviously, pattern than we've seen on the composite. Dow Industrials actually holding up a little bit. Potential stage 1 again, like we've seen in a lot of the indexes, but struggling, made a stage 4 continuation and has failed to come back into the range for 3 weeks now. So still stage 4 at the moment, but a reversal back up into the range could turn this into stage 1, but at the moment remains stage 4. Small caps, same kind of picture. Same with the Russell 2000. It's potentially moving into stage 1 here, but could well just be stage 4 still at the moment. So it's a very tentative area at the moment where it could fail and just make a continuation breakdown. So it's just making a base structure within stage 4 at the moment, which could potentially be stage 1 type behavior, but it needs to show some more strength in here again. Look at the Nasdaq Composite on the daily chart. Friday's action reversed heavily what we saw a lot of Thursday's price action, but didn't make a lower low, and volume was lower there. So a little bit of a small bullish sign there, even though everything was heavily negative. Volume was lower, and it's obviously held the majority of that bar there. So we'll see if this can start to come back above that this week or not. Still underperforming the S&P 500. Same with the Russell, reversed a lot of Thursday's bar there, but it hasn't yet broken down below that range as we just saw on the weekly chart. Relative strength versus the S&P 500 has recently started to outperform since the start of the month. So at the moment, the small caps lead. We need to see a break above this 176 kind of area in here in order to start to get more bullish again on this. But obviously, if it makes a continuation break it down, then we'll continue on in stage 4. VIX remains elevated above the 200-day moving average. This is your 200-day moving average down here around the 26 level currently. So it's way above that. You've got 2.5% moves or so a day on average with the VIX up in this kind of area here. So we need to see this come back down below the 200-day moving average and move back down towards more of a positive environment, but still a way off that currently. If we look at the individual sectors here, so actually go through, you see on the lower part of the chart here, we've got the sectors. You can see vast majority of them are still below the red 200-day moving average here. I think they actually, except for the energy group, energy sector, it's the only one that's above its 50-day and 200-day moving average. All the others are below. So if we look at these on a weekly chart, go into here, where are we? Start with the XLB, so you can see stage 4 at the moment. Got XLC, communication services, is in a deep stage 4 decline. Energy still holding in stage 3 currently, so this is your current stage 3 range. Got XLF potentially could be forming stage 1, hasn't made a continuation breakdown as yet, but still be considered early in stage 1. If it can continue to improve back above that 30-week moving average, then that would potentially mark this more as stage 1, but at the moment still tentative, either stage 4 or attempting to move into stage 1. Same with industrials here, got a tentative attempt to hold here at the moment, but still fairly weak at the bottom of the range, so could quite easily make a continuation breakdown in stage 4. But so would still mark it as stage 4/1 potentially. Relative strength against the S&P 500 outperforming there. Got technology with a further continuation breakdown, so still in stage 4. Consumer staples is in stage 4. Real estate, worst of the sectors, in stage 4. And utilities also in stage 4 at the moment now. So, and healthcare, stage 3 there, still holding in the range it's been in for a while. Had a failed stage 4 breakdown attempt there, rolling back over again, but still hovering around the edge. So consider that late stage 3 at the moment. And then XLY again, testing the bottom of the range. Potentially this could be developing into stage 1, but still stage 4 at the moment, with a tentative attempt at stage 1. So as you can see, we've got the vast majority of sectors still stage 4, stage 1 at best, and a few in stage 3. So